So, mortgage fraud. The main thing that happens with mortgage fraud is the lenders don't want to lose money based on misinformation. And misinformation given by a buyer to a lender is what mortgage fraud is. So let's talk about it. I'm Andrew Gavin. I'm a licensed mortgage lender. I cover all of California and I sell real estate here in San Diego. Number 5 is what's called nominee fraud. This is when you're buying for someone else. Here's an example. You purchase a home in your own name, but you're planning to let a friend or a relative live there that has bad credit or financially couldn't qualify to get a loan themselves to purchase this house. So you've essentially told a lender that you're buying a house for yourself and you're going to let a friend or relative live there. Maybe they're going to pay you rent. Maybe they're just going to pay the mortgage itself. That actually doesn't matter in this scenario. It's the fact that you claimed you were the buyer and you were never planning to live there. What are the consequences for this? You could have the loan term called due immediately, meaning as soon as they figure this out, basically they call the full amount due and you have to repay that. You could have criminal fraud charges against you and you could have credit consequences as well where you could potentially get blacklisted. Here's the thing. If this happened and they called the note due, you couldn't just go and get a new mortgage because you're being blacklisted by these guys. The next underwriter is going to find out about this and ask what's going on. And they're not going to issue you a loan to cover this because you defrauded this company. That's a major consequence to this type of mortgage fraud.